Hey guys, it's Josh and Bruce. We're here at another Taco-Bout-Tuesday, back at our favorite spot, Torchy's Tacos. And today we're discussing investment strategies, whether that's the stock market, single-family homes, or even multifamily homes, because those are a couple of my favorite investment strategies as well. Chad, go for it.
Yeah, so we've seen some recent changes in the stock market. Obviously, if you're watching your stock investments, you've seen them gone down considerably here over the last little bit. We're really trying to address people who have investments out there. Maybe their investments are tied to the stock market. We're really offering a different opportunity for investment that we think is more stable and will increase over the years to come, unlike the stock market right now that's trending down. So I recently pulled some data. The S&P 500, if we look over the last 3 years, brought about a 30% gain over the last 3 years. Pretty good for the stock market. But if we compare that to residential home prices, single-family homes, here in Collin County, I pulled those statistics. They're 75% over the last 3 years, 75% gain. If you look at multifamily, they're about 85% gain. Now, history doesn't always dictate future, but we all know where the stock market is expected to go over the next little while. It's on a downward decline, where real estate continues to go on an increase even over the coming years. So why multifamily? Why is that one currently the best, and kind of the outlook is good for multifamily?
So I think there's multiple reasons why multifamily is a great investment. I think you have all of the reasons why we've talked about previously, why invest in multifamily, but also inflation right now is at a 40-year high, but rent growth is also at an all-time high. Another thing with rent growth being at an all-time high, you would think, okay, that brings high vacancies, but right now we're actually at very close to an all-time high of occupancy for all of these. The other thing to look at is cap rates are compressing. What that means is it's a very stable asset. And so as cap rates are compressing and debt is still cheap to acquire, then you're always going to have buyers for your investment. So while you're increasing your rent growth, increasing your profitability, you are also expecting another buyer to come in and give you that equity buyout at the end of your investment.
So I want to dumb that down a little bit because I'm not a multifamily guy. Basically what Josh is saying is as rent growth increases and you can charge more for rent, and as occupancy is increasing, your multifamily complex is generating more cash flow and is generating more profitability. And so it ends up being a great investment of the years to come, right?
It is a great investment, and you can even talk about this with your residential. We are experiencing an all-time low as far as supply goes for our residential clients. But even more so, if we're looking at that and comparing it to multifamily, we're going to have an all-time supply low for the next 10 years, and that's what's expected. And so people are going to be renting more and more in the cities and areas that they want to live in.
Yeah. Okay, so it's not everybody can afford to buy an apartment complex. So how do they get into a multifamily investment?
So, I get asked that all the time. Josh, I don't have all this money to buy this big, giant multifamily apartment complex. And to me, I always say, don't get into something you don't know everything about, right? And so when you're getting into multifamily investing, there are various avenues of investing. One of my favorite is syndication. You can come in as a limited partner, put towards maybe $50K towards becoming a limited partner. You get paid out in dividends. That means quarterly every year. And then at the end of your hold period, which right now is about 4 to 5 years, but even some are extending that to 7 years, is during the end of the hold period, you'll go off and sell that asset to another buyer and get a massive equity gain. We're working on a project right now that has a 72% return on investment, meaning you get $72,000 on your 100K investment just as a limited partner, and all you're doing is parking your money. You're not answering phone calls from tenants, you're not doing property management, you're not collecting rent, you're not doing repair and maintenance. You are literally parking your money in an investment in an environment that is successful.
I like that. That's good for me. I don't want to answer phone calls, I don't want to fix toilets, and so that kind of scenario is perfect for me. Listen, if you want to know more information, we did a little talk earlier on syndication, kind of explored that a little deeper. But we're really trying to provide an investment alternative to those people, whether you have investments in IRA or whether you have a separate cash investment in the stock market. it's probably wise to leave some of it there, but it's probably wiser to diversify a little bit as we go forward. And if you're curious about what you should use as your next investment vehicle, give us a call, and we'll be able to talk that through with you. So we're going back to our queso and chips. If you've never been to Torchy's, you can come just for the queso. It's excellent. And that's it for another Taco-Bout Tuesday. Thanks for joining us. We'll see you next time.
Bye, guys.